Hey everybody, welcome to another episode of the House of Ways and Means. As you know, tomorrow's going to be Christmas and we're very excited, and we just want to wish you and your family a Merry Christmas, Kwanzaa, Hanukkah, whatever you celebrate. We just wish you the best and we hope that you have a really good holiday.
So let's get right into it. Today we are going to be talking about the company Robinhood Financial. Some of you may know that name because it's a well-known brokerage in the United States. And what they do is they have an app, and through their app you're able to buy and trade and sell any U.S. listed securities, and they won't charge you any commission fees. So that's a great deal for anybody who wants to get started in investing but may not have a brokerage account yet. If you're interested in hearing more about the brokerage side, we're going to put a link down to it in the description so you can take a look and see if perhaps this is right for you. But the scope of this video today is not so much about the brokerage side, but it's about some news they released recently. Let's start by defining a few terms that we're going to be using in this video.
Number one, FDIC, or Federal Deposit Insurance Corporation.
So you may have heard of FDIC before. Basically, it's a federal agency that will protect you against the loss of accounts that you have on deposit at different banks. So what it does, it provides insurance in case a bank or a credit union or an institution goes under, basically, with your money in it. So the limits at current are up to $250,000 per account. So if you have, say, some money in Bank of America or even some of the regional or local banks you may be familiar, and they happen to be a FDIC insured institution, then you will get restitution for the loss of the account that you had there.
And number two is SIPC, Security Investor Protection Corporation.
So what SIPC is, it is a nonprofit, but it was created as a result of a federal statute. So what that is, it applies to your brokerage houses. So say you have an account with E-Trade or TD America or any of those other accounts which you use to trade your securities through. So what the SIPC does, it provides insurance protection to all the institutions that are members of their group if they go under. So if you have some money in securities with E-Trade and E-Trade was to go under, then they'll protect you for accounts that you have that institution up to $500,000.
So how would you say the Robinhood company ties into all of this?
So what happened recently, and possibly you all have heard, Robinhood Financial tried to basically create a new product, which was called the Robinhood Checking and Savings. And what was going to happen with that was they promised that they would, basically create high interest checking and savings accounts up to like 3% interest, which is a great amount considering if any of you have been paying attention to the rates of return you're getting on your savings and checkings account lately, or pretty much ever since the financial crash, it's been, not even 1%. 0.5%, 1/4%, almost nothing. You might as well just put your money under your bed. Obviously it's not safe there, but it was a big deal for a company that's created a reputation, especially amongst millennials, for being a company that will save you some money. So, they came out with promises saying this is SIPC insured. So maybe 2 days after they came out with that announcement, and there was a lot of excitement around it, the SIPC head came out and said pretty much, look, we're not insuring this account. We don't really know anything about it, and we are going to report you to the SEC, or the Securities Exchange Commission. So, not long after that, the heads at Robinhood said they pretty much just took the whole thing down, took it off of their website, just stopped mentioning it, and the whole thing just went away as if it never, came out to begin with. The important thing I want to instill in you guys today, unless you have a particularly high risk tolerance, you want to stick to banks that are FDIC insured and brokerage houses that are SIPC insured for your securities and your deposits. don't to go taking unnecessary risks. I mean, a lot of us never thought that some of the companies that went under during the financial crash went under. So, don't ever try to be too smart, try to be too clever. Who knows what can happen? Be safe, be smart. You work hard for your money. But take heart, we have 3 alternatives for you that are also high-yielding checking accounts with debit cards. These are all at FDIC banks.
So the first is One American Bank.
One American Bank. So you see on the slide here the stipulations for their account, but it offers up to 3.5% right now on their high interest checking account. You can apply online, and the link is going to be down in the description, so you can take a look at the fine print and see if this is a good fit for you.
And number 2, Consumer Credit Union.
Consumer Credit Union is currently offering rates starting at 3.09% on their high interest checking account. And as you can see on the slide, similar qualifications or requirements to the previous account, just related around, make sure you're getting e-statements, make sure you're using your debit card, making sure you have a direct deposit going to that account. And so the starting rate is 3.09. It goes all the way up to 5.09% by, just reaching easily attainable requirements. And also the link is going to be down in the description as well. You can take a look and see if this is a good option for you. You can go ahead and apply online if you like what you see. And that's also on $10,000, up to $10,000.
And finally, Heritage Bank.
Heritage Bank is a good option if you have even more cash to put on deposit. So right now, up to $25,000 on deposit, their high interest checking account is yielding 3.33%. So similar requirements to the other 2, and the link is down in the description. You can take a look at all 3 of these. Make sure you read the fine print. Make sure you read all the rules and regulations, and just make sure that this is something that can fit into your lifestyle. But these are pretty good rates, all above 3%, and as I included, one of them goes up to 5%, 5.09%. So some quality options there.
Well, that's it for this video. We want to thank you for tuning in and watching another episode of House of Ways and Means. Of course, if you like this video, please like it, subscribe to our channel. There's going to be much more information that we're going to provide to you, and we want you to not miss out on anything that you can use to better your financial habits. Thank you so much for tuning in.
Merry Christmas to you and yours.
Take care.